of the primary requirements in successful day trading is discipline. That's probably the most key element to keep your path a profitable one. The trend capture spectrum of day trading platforms does just that with the way it's automatically set up. Here we have the T-bond futures day trading system, and you know ahead of time exactly what you need to set your trading platform up for automatic price entry, automatic stop entry, and automatic target outs. In this particular situation, your initial stop upon entry is 2 ticks. After your position has reached a profit of 2 ticks, you exit your first lot. Your stop is then moved to break even, and you have a free trade. Your second out is at 4 ticks, and your third out is a disciplined trailing stop of 4 ticks that will automatically take you out of the market if the market begins to go against you. This will allow you to participate in larger moves. The trading room, where we trade these trend capture day trading programs, will talk about discipline on a daily basis. Not just about the discipline inside the programs themselves, but about discipline with making sure that you use your stops, making sure that you have a loss limit for the day. Once you reach the loss limit, you're done trading. Making sure that you have a profit target for the day. Once you reach that profit target, you're done. Making sure that your position sizing is appropriate for your account size. We go over all of these things on a daily basis to make sure that everything that can be done right will be done right, because day trading is a very difficult venture. The basic premise of a long trade in the trend capture platforms is extremely simplistic. It consists of nothing more than the market touching the lower green band or channel, reversing and closing on its high. That's the first heads up. The confirmation then is down here, where the flow indicators need to confirm the touch and the reversal. They both need to be green. In this particular situation, they're both green, so you have a confirmed long trade. Everything is color-coded here. Long side for the green channels, and you need green flow. Short side for the red channels, and you would need red flow in both of them. It is necessary for the bar to touch the channel, not just get close, but touch the channel. Upon entry, you would automatically put in your initial 5-tick stop, and also your target outs should automatically be put in place depending upon what trading platform you use. Are you able to see another long trade on this page? That's correct. There is one right here. The bar touches the lower green channel, reverses and closes on the high, and both flow indicators are green. That is another confirmed long trade. So the simplicity of the long side trades and of the system in general is one of the reasons that it's so powerful. It's very easy to learn and a very disciplined approach. The short triggers in the trend capture day trading systems are just the inverse of the long triggers that we just went over. Here the bar comes up and touches the upper red channel or band, reverses, and closes on its low. That's your first clue that there's a potential short trade in the making. We come down and we check the flow indicators. Both of them are red. Therefore, we have confirmation to go long. We enter the market with market orders. So this short is confirmed. You would go short at the market. Once again, immediately upon execution of your short, you're going to make sure that you have your 5-tick initial stop in place to protect you against adverse market reactions to your position. And you're going to make sure that your target outs are also in place so that you have a disciplined formation of a trade. That's all there is to the short setups. Very simple, much like the long setups, and a very disciplined approach. The next section I'm going to cover the emergency exit. The emergency exits for the trend capture day trading systems are an integral part of trading this particular model. All an emergency exit is the bar after the trigger bar does not confirm the original direction. For example, you can see this green bar right here touched the bottom channel, reversed and closed down its high. Both the flow indicators were green, confirming a long position. The very next bar, however, the close was lower than the close of the trigger bar. That is an emergency exit. You exit at the market. No excuses. No, I'm just going to wait a little while and see if it comes back to break even. You exit at the market. Typically, the loss from an emergency exit is anywhere from 1 to 3 ticks. And its purpose is to give you advanced warning that the trade has a higher probability of not working out, and therefore will get you out earlier than waiting for your 5-tick initial stop to get hit. So it saves you anywhere between 3 and 2 ticks. As it says here, the emergency exit is taken when the bar following the signal bar does not confirm the direction of the signal. That is an emergency exit for a long trade. Here is an emergency exit for a short trigger. This bar touched the upper channel, reversed and closed on its low. Both the flow indicators were red, indicating a confirmed short signal. The very next bar closed up. Its close was higher than the trigger bar's close. That is an emergency exit. You exit at the market immediately. In this situation, it was a 2-tick loss. And as you can see, as it continued to go against your short position, if you had stayed in, you would have been stopped out at a 5-tick loss, which is our initial stop. There will be times where you will get 3 or 4 emergency stops in a row, but discipline needs to be exercised, and you need to follow those emergency exits. Typically, when you get a string of emergency exits in a row, there is a large move coming just around the corner. With the emergency exit being such a small stop out, it's very easy to stomach 3 or 4 of them at 2 ticks each, only putting you 6 to 8 ticks in the red for each contract. So that is the emergency exit. There are only 2 models that utilize the emergency exit. The other models have such tight stops that they don't need the emergency exit. That's basically the crux of the entire system. We went over the long setups, the short setups, the emergency exit, so on and so forth. Everything will come together if you're disciplined, you follow the rules, you put the stops in, and you take your target outs. If you have any questions, please feel free to drop me an email, or if you're watching this video because you're in the trading room, send me a chat, and I'll be more than happy to answer any questions that you might have. My email address is tradecapture@gmail.com, tradecapture@gmail.com. You can send me any question that you might have, or you can even send me a request to come into the trading room for 2 weeks with a guest pass for free. I hope these videos were informative, and I look forward to seeing some of you in the trading room, and the best of luck to you with your trading.